Hello and welcome back to another video. Today I'm going to be explaining how VA loans work. Now by the end of this video you're going to understand exactly what they are, the different types of VA loans we can get, how you can qualify for them, as well as all the benefits and disadvantages. So make sure you watch this all the way to the end so you don't miss any important details. So to start with, what is a VA loan? A VA loan is a mortgage guaranteed by the Department of Veterans Affairs. VA loans are typically issued by private mortgage lenders, but the VA assumes some of the risk. This means if a VA borrower fails to make payments on their loan and defaults, the VA will repay the lender a portion of its losses. Because of this added protection from the government, lenders, those who are approved to offer VA loans, can be more lenient on credit score and down payment requirements when making these loans and lend out larger amounts. So what are the different types of VA loans we can get? To start with, a VA purchase loan. This is the most common type of VA loan, which allows you to purchase a property to live in as your primary residence. There's also Native American direct loans. This loan is for Native American military veterans or a veteran married to a Native American. This allows you to buy, build or improve a home on federal trust land. There's also an interest rate reduction refinance loan. If you have an existing VA-backed home loan, you might be eligible for a VA-backed IRRRL to help you reduce your monthly payments or make them more stable. It's also a cash-out refinance loan. If you want to take cash out of your home equity to pay off debt, pay for school, or take care of other needs, you might be eligible for a VA-backed cash-out refinance loan. And finally, there's VA construction loans. Some lenders offer purchase loans that can be used to buy a home from the ground up. These are sometimes referred to as VA construction loan. So how do we actually go about qualifying? Start with service requirements. You must be a veteran, active duty service member, a member of the National Guard, Reserve, or the surviving spouse of a veteran. The minimum active duty service requirements depend on when you served. For example, if you served for at least 90 continuous days, all at once without a break in service, you meet the minimum active duty service requirements. You also need a certificate of eligibility. A certificate of eligibility from the VA is required. You can apply for your COE online, by mail, or your lender can get it for you. There's also credit and income requirements. You'll also need to meet your lender's credit and income loan requirements to receiving finance. And finally, your discharge status. You may not be eligible if you received an other than honourable, bad conduct, or dishonourable discharge, although you can apply with the VA to upgrade your discharge status. So now that we know exactly what it is, what are the main benefits? To start with, there's no down payment required. VA loans do not require a down payment, which can make home ownership more accessible. There's also competitive interest rates. VA loans typically offer lower interest rates than conventional loans. There's also no prepayment penalty. There is no penalty for paying off the loan early. There's also no need for mortgage insurance. Unlike many other types of loans, VA loans do not require private mortgage insurance. And finally, there's more lenient borrowing requirements. VA loans have more lenient borrowing requirements compared to conventional loans. So what about the disadvantages? To start with, there's less equity in your home. Being able to buy a home with little or no money is one of the biggest advantages of a VA loan. However, once you move into the home, you'll own a property that's 100% financed. If the property you're purchasing is in a rising market, that's likely only a temporary problem. But if the market is either flat or declining, it can be a problem. It also cannot be used for vacation or rental properties. One of the primary limits of VA loans is that it can only be used to purchase or refinance owner-occupied properties. If you want to purchase a vacation home or investment property, you'll need to use conventional financing. There's also seller resistance to VA financing. Some sellers may be hesitant to accept offers from buyers using VA financing due to misconceptions about the VA loan process. And finally, there's a required VA funding fee. The VA charges a funding fee to most veterans who use the program, which can be rolled into a loan amount or paid up front. So this has been my video explaining exactly how VA loans work. Hopefully now that you've watched this video, you have a good understanding of how they work, and you can use some of the knowledge that you learned in this video to help assist you getting your VA loan. So I hope you found this video helpful, and thanks for watching.